Commercial real estate loans total $4.7 trillion. Nearly half of these loans will be coming due over the next 2 years. But after the next 2 years, things don't get any easier. Commercial real estate debt will peak in 2027 with nearly $1.3 trillion in loans coming due that very year. It was another time in history that might not be so bad. But these are not ordinary times. Just like the federal debt, the commercial loan crisis is getting kicked down the road. Let's begin with 2023. That year, the value of delinquent commercial real estate loans rose by 25%. Modified loans defaulted for a second time at unprecedented levels. Modifying loans are a way to delay a crisis. When loans come due, financial institutions will sometimes offer extensions, giving the lender more time to pay that loan back. With that in mind, let's look at the year 2024. In that year, 20% of all commercial real estate loans came due. That's $729 billion, and that marks a nearly 30% increase from the year before. Here's the kicker. Redefaulted loans surged by 90% compared to the year before. So how bad is that? Well, in November, the delinquency rate for commercial mortgage-backed securities spiked to 10.4%. This was the fastest 2-year increase on record, with rates climbing 8.8 percentage points from 2022. Here's the scary part. During the 2008 financial crisis, the delinquency rate was 10.7%. And the 2-year increase in delinquencies went up by just 6.3 percentage points. As we head into the next few years of commercial real estate loans coming due at increasing amounts, a surge in defaults and redefaults could trigger massive financial instability. So how did this happen? Well, there are several root causes. First, the pandemic triggered remote work. With more people working from home, many businesses are not renewing their office space or just walking out of it completely. Large cities are facing the worst of the empty office crisis. In San Francisco, more than a third of office space is available for rent. In Dallas, 30% is available, with cities like Atlanta and Houston coming in close behind. It's also caused property values for office buildings to plummet, many losing 50 to 70% of their market value. Second, low interest rates during the pandemic caused malinvestment. We can thank the Fed for this one. And finally, zoning restrictions and building construction have prohibited commercial real estate from being repurposed from office space into something more profitable. Many office towers are unable to be converted because of how they are built, making it cheaper to demolish and rebuild. Some efforts have been successful, like 73 office-to-residential conversions that were completed last year, but those conversions covered less than 8% of the more than 900 million square feet of vacant office space available nationwide. All this has created a perfect storm. Landlords can't pay back their loans. Many of these loans are thus getting extended, but not because the banks are nice. Commercial property value has dropped drastically, as mentioned before. So the lending banks will lose money if they take back the building and sell it. The landlord and the lender are essentially in a standoff. The real question is how long can this problem go on before it blows up in everyone's face? As more and more loans come due over the next few years and office space remains empty, where will landlords get the money to repay their loans? How many times can commercial real estate loans be defaulted and extended? Most importantly, how much of a loss can banks take before the final domino falls and we see bank closures like we did in 2008? Well, a 10% loss on commercial real estate loans would leave more than 100 small and mid-sized banks undercapitalized. A 20% loss would render over 900 banks undercapitalized, including some larger banks. Keep in mind that nearly 2/3 of all commercial real estate debt is held by small banks. To make matters worse, unlike larger banks, smaller banks have not begun reporting all of their losses. So when a crash happens, it could be worse than we even know. Not only will we have a financial crisis on our hands when this happens, but we will also be seeing unprecedented levels of bank consolidation. In short, this type of crash will clear out small banks and leave big banks controlling the monopoly board. So what can be done to solve this impending crisis? Can Trump fix it, or is it too late to correct? Let me know what you think in the comments below. Now that you know where we've been, find out where we're going. Tune in to Ladies Love Politics, where you can stay informed without going insane.